Hello, 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 everyone. Good morning. Happy Fed Wednesday. How is everyone doing today? Welcome. Hey, Davey. Yeah, ADP non-farm employment change comes in lower than expected. Again, I don't, that's not as important, but it is something to notice. On the radar screen, markets are still up from yesterday's close, but slightly down from the highs from earlier. And what else? We had the trade balance come in. Both those are minor. Ken, good morning. Thank you for posting those, by the way, Davey. Good morning, Ken. Good morning, Wavy. Happy Fed Day. Good morning, Jake. Thank you for all you do. You're very welcome, Jake. I'm glad you are here too. Jacob. Jake and Jacob back to back. Good morning. And Ted, good morning. I've been waiting all night to ask your opinion on Bob's short term bottom thesis. Well, I'm not as bullish as Bob. Not anywhere close to being as bullish as Bob. It's got a lot of heavy lifting. Now, it still favors a slight short term bullish move. We will take a look at that. But before we do, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term, people, keep the comments coming and like the videos or dislike them if you don't like where the markets are headed. So, with that, here we go. Again, pay attention. 9 a.m. This could be moving the market. ISM non-manufacturing, okay, if this drops substantially from 58, remember contraction is 50 and I'm not expecting it to drop below 50 at all. But if this gets down to 55, 54, could be interesting moving the markets potentially because then you're getting a bigger slowdown. So we shall see. I will be keeping an eye on that in about 55 minutes. For any crude traders, we have all the crude numbers coming out at 9:30 Central, 10:30 Eastern. Big thing this afternoon. One Central, 2 Eastern is the interest rate decision. It's pretty much baked in. And I got asked this yesterday, it's showing 1%. That's not a 1% hike. That's not a 100 basis point hike. We're going, remember, the range right now is 0.25 to 0.5. This site lists the upper end of the range. A lot of other sites talk about the lower end of the range. So just take the difference from this. So it's baking in a 50 basis point hike. All right. That's the hike it's baking in. So we'd be going from 0.25 to 0.25 to 5 range. And then we'd be going to 0.75 to 1. This shows the upper end of the range. The real important thing is the Fed press conference, what they say during that. Are they even going to get more hawkish? Are they going to start talking about the 75 basis point hike in June? That's going to be really interesting. What about the balance sheet runoff and reduction? Are they just going to let stuff run off? Now, what's interesting is they do have a lot of long-term dated securities on there. So if they want to accelerate the runoff because they don't expire anytime soon, are they going to have to go start selling stuff to unwind? There's some stuff that could be interesting in the press conference. I'm expecting minor volatility, but more significant potential volatility around this number and some potential volatility around this number should it come in with a bigger miss or if it comes in with a bigger beat. All right. If it's coming in at 58.4, 58.6, But if it comes in substantially different from this number, we could see some volatility in, about 53 minutes from now. FOMC still baking in that, this is what I'm talking about, the 75 basis points to 100 basis points as a Fed funds rate. So that would be that 50 basis point hike. I don't see us going. I don't think they'll shock the market with the 75 basis points. If they're going to do 75 basis points, they'll be putting that in the press conference and really start alluding to that in June, that they're strongly considering a 75 basis point hike. Also, remember, still in negative gamma territory, which amplifies volatility up and down. So do not forget about that because, again, a sell-off will get amplified. Because of hedging requirements, a rally can get amplified. You asked my thoughts, Ted. I mean, here's my longer term thoughts based off this last sell-off. In order for us to really get a substantial move on for these recent highs, which would be a pretty decent snapback rally, we have to get a closing basis above about 41.15 on the S&P. Now, that would be above the daily rotation zone, But let's take a look. That would also be above the weekly rotation zone. And then we'd just be targeting, again, see, it favors this area, but we have the flat 200 in here. So on a continued rally, we have a lot of stopping points. Could it continue? Yeah, but I'd have to see something really change. Cycles still can have a little higher to go. RSI's in the middle. You know, I'm still favoring the slight rally. Why? We have that double on the Nasdaq in here. The other thing is, even if we get the move up above this 13,542 on the Nasdaq, that only takes it back to about 14,300 and nowhere near. You could still complete this bigger double. We have a double within a double. You could complete this bigger double and still not get above that 62.5 on a closing basis and roll back over. So even with a little more substantial rally, I don't see us getting, unless something drastically changes or unless the Fed starts saying, you know, we see something different. We're only seeing maybe a 25 basis point hike in June, and we're going to reassess that aggressive roll-off of the balance sheet. I'm not seeing anything that really sustains a huge rally. A huge rally. It has a lot of heavy lifting to do. So, short term, and this is where short term, I still have the upside bias. What invalidates that is if we get a close on the daily on the S&P below 4108.50. I'll get worried if we start breaking down intraday before 4128 to 4126. And when I mean worried, I don't mean like, oh no, what do we do? That means I'm very cognizant of potentially returning to this level. So I get very those short-term scalpy downwards and then going into any long positions. If we start getting back below here, it's going to got to get out of those. That would be a very weak move. The rotation zone on the 4 hours flat, which generally happens, we have an upward sloping consolidation. All right, but you see here that 50% level, that would be below yesterday's low. Oh, by the way, happy May the 4th be with you day, Star Wars Day, whatever you want to call it. Forgot to mention that. Like, that's more important than the Fed, actually. But that would take us back below this harmonic of the 12.5 and the harmonic of the 50%. Take going below yesterday's low and into this key move. I'm more worried about watching for downside potential because the upside can take care of itself if you're in a long position. Now, we still have 41.23 as the key levels I'm watching this morning. And with the Fed announcement, and then above there, minor would be, if we really get a move on, 42.30 would be minor. And the next major area I'm really watching for a continued move up, let me give you this level, would be 42.45, then 42.71. Let's see. I see many traders are setting up longs and tissing a similar run as last FOMC meeting, and it's again going to be the breakout order breakdown play. If we are still sitting in this range, I'll start getting breakdown play. First warning sign will be below about 41.61. Breakout play, if it's still in this range going into the meeting, would be above about 41.95 to 41.99. Not sure if you want to be long. Then if you're not sure and we don't have a great pattern and there is no great setup even on short-term basis here. See, we're still caught. I mean, this is a little pullback, but we're still caught in this minor range. You had a little attempted breakout to the upside. Now it'll change to the downside. Little sloppy double, which is already virtually completed. So if you want to watch something off the open, 41.71 would be very minor. I'm trying to cover the bigger picture. We are still against the daily rotation zone, so even if we pop and then get momentum with the Fed announcement to the downside, I'm going to go with the momentum. And remember, the first move is generally the fake out move with the Fed. The first move is generally the fake out move. You got to watch for that second reaction. That second reaction is going to be more important. So keep that in mind. Also, before I switch this, hold on. Before I switch to this, if you look at that daily chart, remember that harmonic cluster I just talked about, that which is virtually the 50% of this run up. Look at that little level based off a closing basis. That was the close essentially from April 29th. So you get below that, you are only into this long wick, which was a pretty decent reversal candle, but we've only got so far a 2-day on a closing basis and 3-day intraday run up. So then I get really bear. This is where I start getting really into that, back to that bearish mode. Nasdaq, we still have this double pattern. It has not got that second cut. Got close to that first target, but nowhere close. Yeah, I mean nowhere where I can move up a stop yet. Again, 13,198.50 right in front of that 13.2 level. So that's still what I'm watching for. And this would be, I'd be more aggressively moving up a stop to about 13,000, 13,025. This area where you see all these tails coming in. There's some buying pressure in there, but we start breaking back below there. Don't really want to maintain a long position in this. The 50% level from the run up, those 12, about 945, and the key line, the sand, it right now is 12,888. If we do make a new high this morning, remember, put your harmonics on your chart and ratchet it up, because as you ratchet it up, this 62.5 will rise with it. Above there, I'm still watching. We have a cluster at 13,230. We start getting above there. That's going to be another raise the stop level for longs for me. 13,274 to 13,287 is a profit area, and then another profit area is 13 about 340 to 350. Again, the key breakdown areas is 13,025 to about 13,007, 8, 10 in there. Dow, similar position, still hit that first harmonic. So if on a rally, I'm back to that first harmonic, 33,240, 250 area. Then I'm going to 33,342, and then about 33,500 to the upside. 33,400. I'm going to refine that. 33,450 to 33,500 would be a target area I'd watch for potential reversal patterns. Above there, then you get back to this breakdown zone of about 33,700. Key line, the sand for me, I start getting edgy on the Dow below 32,900. And then if we break 32,807, no, it's not below the 62.5 yet, but you see this was the buying pressure in here. We start breaking below there. Then I'm focusing on short-term shorts, this 32,700 level, and then lower pricing potentially after that, because also you see this 50% level on the daily. Into there, you just have this long tail period, and this would pretty much start negating this potential reversal bar. Keep in mind that first target is with the daily rotation zone. And the second target I listed, this second major target, 33,704, is within still the daily rotation zone. So if we do get to that pops the upside, then we will have to reassess after the market closed today to see how much we popped into the daily rotation zone and the kind of strength we got off the Fed announcement. Russell still against this 1905 key level and the daily rotation zone. A pop above there then. I'm just going to about 1931 and then 1950. Breakdown, you can put your harmonics on here. We'll just do it real quick for people following along at home. I'm really just keying off the 62.5 on this one, about 1862. DAX, again, in consolidation, flattening out here. Rotation zone flattening out. Breakout play, I need momentum above about 1480. Breakdown play now, I'm watching yesterday's low about 13,930. Crude, a nice little pop this morning. Trying to break out a key resistance. I'm really keying off this 108 area, 107.90, 108 area. We get above there. Minor 109.20, but then I'm really focused on 111 on a breakout play. And then that would be with a stop below 102 area. Because if you break back down below here, it's back into consolidation, and this will just be a fake out breakout, just trying to establish a new higher range. Now, I'm really going to be interesting where we close on crude, because so far we've come down. We made a lower low here than this low. lower high. Then we made a higher low. I want to see, and we've made a slightly lower high than this, but this is sort of a trying to build a higher base in here. So I want to see if we do get a close back above 109.20, because then I'll get more interested on a potentially stronger bullish move short term. Not a long-term bullish move. I need back about 116.70 to get into a longer-term move in crude. Gold, very flat. Still trying to watch to see if this can hold a short-term bottom in here. Silver, even on a pullback, then I'll be watching for the potential double. We're not quite there yet. Notes, still holding. This is still a potential longer-term double pattern unless we really get below this about 170.20 area. 117.20 area. So that's the little thing. Other than that, it's just an inside bar from yesterday, so it would just be a short-term play for me based off a Fed announcement. Don't know if we'll get a lot of action prior to the Fed. Dollar index, you can see here, inside day from yesterday, burning off its overbought condition and getting to a cycle bottom by moving sideways. Remember, there's two kinds of corrective moves, a pullback move and a sideways move. This so far is a sideways move. All right, with the flattening out. So we can't use the 8 pushing the price on the 4 hour. We'll watch for, again, 102.81. We get below there, I'm starting to, then I will target a pullback move into the daily rotation zone with a potential full target being 101.84. VIX, completely flat. My support level I'm really watching now is 27.14 if we do rally. On a spike up, not getting super bearish again. I gave you the breakdown levels, but until we get below 33.41, not getting super bearish on a longer term position. It would be bearish on short term positions. Now, long term, I'm very bearish, but I really need to see a sustained move back above about 33.41 to start putting on like swing trades longer term, medium term bearish. All right, let's see. Thank you, Wist661. May the Fed be with you. That's funny. Good morning. Crude has a nice looking double bottom on the daily and a decent looking on the 4 hour. This would. What double bottom are you looking at? On what? This double. I don't know if that... this is not a double for me because it's going to be this. It's not a double for me at all. So this, and there's nothing in here even on a shorter term basis. So this is just a breakout play. I don't see any, at least on the futures. So that's where we sit. Hey, Anna, how are you doing today? Let's see. Where are we sitting? You're welcome, Tad. Things look bearish today. Again, they could change in a moment's notice, William. They can change in a moment's notice. I'm still slightly favoring a rally. But again, it's a Fed day. All that can change. I got to go with we still have a double pattern. Sorry, you have a tree service here. I still have a potential upside stuff, but it's all going to be dependent on the Fed rally. It's why it's still tactical trading. How long have I been trading? Since 1992. That's when I started. I'm an options market maker. Good morning, Lauren. Thanks for a couple years. Thanks, Mike, for a couple years now. Love your channel. Glad you've been here for a couple years. Thank you for sticking around. I hope you're learning stuff. NVIDIA, we still have the potential double, 201.28, 210.45. It is against the daily rotation zone, so you have to be very nimble, especially at that 210.45 level. If it gets above there, 205.03, 219.46. Remember, if we do pop above here, short-term bullish, long-term bearish, do not ignore that 210. Why? Major support becoming resistance with the declining daily rotation zone. And you see here against the weakling rotation zone. So longer term, I'm still bearish on NVIDIA. Shorter term, I will only get bullish if we start triggering that double. Tesla, above 927 to about 930. Then my target's 952 to 957 and 976. We'll keep slightly bullish on a breakout, but key support is 850, not 860. We break below 860. I'm back to 828, and I'm really watching on a closing basis below 870. We get a daily close below. If the markets roll over, we get a daily close below 870. I'm shifting to a targets back down to 755 to then 700. There's your Tesla, Anna. All right, no problem, Sterling. I make those mistakes too, especially with crunched up charts. There's your quick Tesla overview. If you want the little shorter term thing, you can watch. We have a little resistance base above 916. If you break out with momentum on the open above 916, I would target this 930 area, 926 to 930, okay? If you do get momentum, here's your shorter term thing. You are into a clear path move then. So keep that in mind to the upside. But if the Nasdaq turns around, gets weak, and Tesla's strong, I would bring in the targets. What do I trade the most? Probably S&P and Nasdaq related stuff. And then stocks on swings. Used to trade Tesla a lot more. But so that's where we sit now. And then I'll trade anything with a strong pattern. I like the patterns. If there's no pattern, then I don't like to trade it. I don't like to force trades. You know, like that NVIDIA has a pattern. There is, even though I'm not a huge NVIDIA trader, there is a pattern there. But it would be a short term. That would be very short term for me. Love the dogs. Don't worry about them. Yeah, when you got 5 of them, it's hard to keep them quiet. Hey, Christoph, hope everything's going well overseas. Before the last Fed meeting, you said the first move is fake out, and it held true, and we had a rally over the last hike. Yes, that's why really pay attention. The first move, not always, but the first move is generally the fake out move. George, thank you for putting that up there and again reiterating it. So just be wary of that first move that says, oh, we're whatever it is. We're rallying. Oh, yeah, I got to jump on it. I got to jump on it. Or we're selling. Oh, and then you can say, oh, crap. What just happened? So that's why you sort of got to be nimble. And unless I'm managing a very short-term position, I know where my longer-term levels are. Because don't get sucked into many times you get these fake-out moves, the Fed fake outs, and a lot of people go one way, then reverse. And when they reverse, it even amplifies the other way move. You are welcome, Paul. You are welcome, Jacob. Very nice double bottom in MOS. Yeah, Mosaic did trigger the double bottom. We talked about this before. It was still in play. Never triggered the head shoulders. Validated the neckline, but never traded it. And now your target's up 69.95, 71.50, 73.05. I hate trading triangles, Chris. You can trade them. They're just not as reliable as people think they are. For back to Tesla, that would just be a breakout move for me. Yeah, it's technically a rising triangle, but even if you came back, you know, I'd be more worried about the short-term breakdown. You want a short-term level 860. Because here's why I don't like triangles. Because you can break down below this and people say, I'm going into bearish, and dead stop right here at that 860 level. So I'm more interested on the breakout play above that flat level and then a breakdown play below 860. Yes, good luck, everyone. And I need to jump now. I need to get ready for 2 minutes of the open and deal with the 3 people who happen to show up and weren't supposed to be here till 9 in 30 minutes, but now they're here at the market open. With that, I will talk to everyone later. Sorry for the interruption today, and I will have a great trading day. If you don't have a trade, don't do anything crazy going into the Fed day, please. Talk to everyone later. Bye.